All around America right now, everyone is discussing the debt ceiling and the debt that's owed to China. And rightfully so, everybody should be discussing it. It's a tremendously important issue facing the country today. Now, everyone's talking about it regardless of what end of the spectrum they're on, what political or economic ideology that they support. And like I said, it's a really important issue and definitely does need to be discussed. The existence of this debt affects everything because it's government finances, and government finances affect everyone. Just the existence of this debt affects all kinds of things, like the ability to build infrastructure, health care, and even the payment of the debt itself, and how it affects, the finances of the government. Everybody's throwing their 2 cents in. Well, they're throwing in 2 cents, we could probably pay down the debt a lot faster. But either way, regardless of what end of the political spectrum you're on or what your economic beliefs are, everybody's concerned about this debt and everybody wants it to go away. Now, with everyone that's throwing their opinion in, and in the entire the arena discussing this, news media and furious debates in Congress and whatnot, with everybody throwing in their opinion, there's one person's opinion that's being completely forgotten about in this situation, and it's quite possibly the most important opinion of all. That of who the money is actually owed to: China. After all, the money is owed to them, and sooner or later they're going to come looking to collect that money. And with the debt ceiling day coming up on August 2nd, that day might be arriving very soon. With all this debate going on, the government of China is becoming very concerned about America's ability to pay its debt. We hope that the U.S. government adopts responsible policies and measures to guarantee the interests of investors. Responsible policies and measures? This is a code word that's been around for a little while now. Responsible measure and policies. This is another way of saying brutal social spending cuts and vicious austerity measures. Basically, it means cut the health care, education in favor of paying down this debt. And that's exactly what it is: cutting social spending in favor of taking care of this debt. This is exactly what happens to the third world when they borrow money from the IMF or the World Bank. These conditionalities that they have to live up to in order to pay it back. That's right. What's being done to the third world is going to start happening to America. What was previously something that only the poor countries overseas, the global East or the global South, had to go through, is now something Americans are going to have to start going through. That's right. Third world policies and possibly third world conditions are coming to the United States. To put it bluntly, the debt is going to be paid for by the working class, by devastating the healthcare, education, social services, all of it. We're going to be cut to pay for this debt. The rich will pay nothing. The rich are paying practically nothing now. A recent study showed that the United States had the second lowest corporate tax rate in the entire world. It's got to be clear now that the rich is doing it. The rich are not going to pay it. Sooner or later, the middle class is going to have to get it to their head that they're nothing special. They don't have any power. They think they do. They think they're over the poor people, and that they have more clout in society than the poor do, or the working class. They're eventually going to have to recognize that they don't have any power, and that the people they're allying themselves with, the ruling class, the bourgeoisie, the upper class, they're not really their allies. They're just telling them that so that they'll turn around and fight the poor as well. They're going to have to get it through their head that they're nothing special and they don't have any real power in society. Beijing has for a while now expressed a lot of concern over America's ability to pay its debt. In 2009, after the global economic collapse, China became very worried about the U.S. debt, because if America goes bankrupt, then they can't pay that money back, and China loses an amount of money that they can't afford to lose. Just last year, this situation was escalated once again. China holds a certain amount of U.S. dollars in debt. Now, when the U.S. started their quantitative easing, where they printed more money, and the more money there is in a system, the less value each dollar has by the laws of supply and demand. Now, what happened was, when they do the quantitative easing, the more money there is in the system, the less value each dollar has. This lowers the value of the debt that's held by the United States, which means the payback to China in the U.S. dollars they have is worth less. They were undermining the profits of China, which is why China got so upset over the U.S. doing the quantitative easing. Not only is the quantitative easing bad for the U.S. economy, it undermines Chinese investments as well, and that's why there was so much hostility over that. Both the U.S. and China are buried neck deep in this whole situation. The United States cannot afford to just not pay the debt, because China is the largest purchaser of U.S. Treasury bonds. Not to mention the fact that if they just didn't pay the debt, all the other countries in the world are going to realize that the U.S. is not going to pay their debt to them either. Doing so would irrevocably damage international relations, and like I said, China is the largest holder of U.S. Treasury bonds. That would be terrible. Now, China can't do anything. They can't make the United States pay, and they can't just have them not pay, because that's way too much money to lose. So China pretty much just has to sit there and wait this whole thing out. What's happened here is essentially the apex of another too big to fail type scenario. The debt owed to China is so large that the slightest thing could damage that investment. The only thing feasibly that China could do would be to sell off the debt to another country, or just start selling that debt obligation to somebody else. So now, the problem with that is, if China started selling off that debt, all the other countries are going to start selling off their debt, and doing that would devalue the U.S. debt held by everybody. Basically, like a supply and demand type law. You've got this debt in U.S. dollars. Now, if China goes and starts selling that off, given the amount that they hold, they're basically saying the U.S. isn't going to pay it. Now, because they hold so much, the rest of the world is paying attention, and they're going to see, oh man, even the Chinese know they're not going to pay it, and everybody's going to be trying to unload this debt. So just by the force of supply and demand, that's going to crash the whole thing. China's not going to be able to sell it, and they'll end up devaluing their own debt that they hold. So it would be a terrible thing if they tried to sell it. So basically, they have to just sit there and ride this out. And I'm pretty sure the Chinese are not happy about this. Also, if that debt crashes and becomes worthless, that money that's owed becomes worthless, practically the entire Chinese economy is going to crash. And that's nothing short of suicide on their part. Many people believe that this is exactly what caused the global economic collapse. The low interest loans that were coming out of China, the money that was borrowed from China, is what massively inflated the housing market bubble, and then of course that bubble burst, as all investment schemes do. You can't keep investing in one thing forever. Eventually all investments come to an end, and they cease to operate and cease to make a profit. That's just a law of capitalism. Now, in this situation, capitalism is more overtly showing the contradictions contained within it. Right now, U.S. policy is spend less, save more. This is good for the U.S. economy, but bad for its consequences on the Chinese economy. The Chinese economy is saying save less, consume more. And now this is good for the Chinese economy, bad for the U.S. economy. So basically, what we're facing here is two contradictory positions. Now, both of these positions are for the economic stability of capitalism. In other words, the profitability for the wealthiest people in the country. Both working classes, the working class in China and the working class in the United States, are being told to do two different things. Now, these two different things are being done because the ruling elites and the economic system that's run by the wealthy elite are competing against each other. If, say, perhaps, we took the world's resources and distributed them according to need, there wouldn't be a competition for these resources. This hostility, this contradiction of capitalism only exists because of capitalism itself. It only exists because rich people have to compete with each other for the most amount of wealth that they can own, the most amount of profit they can make, while the regular working people are going against their own interests by playing into this whole game. What we need to do is unite across international boundaries and fight for the collective benefit for the working class across all countries to avoid this contradiction. The working classes can have what they need because we can distribute the resources according to as people who have need. The capitalists can never do this because they have to compete with each other. They have to collect as much profit as possible at the expense of others.